Hi everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, September 29th. Before we start, please join me at the Money Show Dallas, October 4th through 6th. That's next week. I'll speak Friday, October 6th on active investing, 3 steps to consistent profits. Just go to moneyshow.com and click on the Money Show Dallas banner. I look forward to seeing you there. And now on to the market. So far today, the Dow is down slightly while the S&P 500 is positive along with the NASDAQ Composite. The Commerce Department said today that U.S. consumer spending barely rose in August, likely as Hurricane Harvey weighed on auto sales and annual inflation increased at its slowest pace since late 2015, pointing to a moderation in economic growth in the third quarter. The report did little to change expectations that the Federal Reserve will raise interest rates in December. And now on that news, let's go on to our first chart of the day. As we usually do, we look at a daily chart of the S&P 500 Spider, symbol SPY. This is the tracking stock or exchange traded fund that follows our S&P 500 index. Now, when I captured this chart today, the SPY was making a new all-time high at $250.79. So here we are at an all-time high again. It seems like this is just the gift that keeps on giving. The red line on this screen, the 20-day simple moving average, is at about $249. The green line, the 50-day moving average, is at $247.20. And you can see here that our uptrending trend line that we've kept going now for quite some time is coming in at $246. So the 20-day, the 50-day, and the trend line all offer potential support should the S&P find it necessary to move a little lower. Now we are going to, the 200-day moving average, the black line is at $238.70 and rising nicely, which is another positive. We want all these moving averages rising, and of course with the SPY at all-time highs, they would be. The 200-day is coming in again at $238.70 or about $23.87 on the S&P 500 itself. So today the S&P is still over that 2,500 mark. I'm looking here still with kind of a question in my mind at the 14-day RSI here, the relative strength index. Now it's still, and one would think it would be, it still has not moved above this line here on the scale, which is at 70, and the line on this scale at 70 means that the SPY is in overbought territory. One would think it might be, as it's making new all-time highs once again, but it could be that the angle of the move has not yet convinced the RSI that this, again, it needs to be in overbought territory. Kind of interesting that even though the SPY is making new all-time highs here, the RSI has still not moved above that 70 line, and it's still saying, I'm impressed, but I'm not that impressed. Now, the slow stochastics on the bottom scale, it is a little more impressed, and slow stochastics, I call them the drama queen because they tend to rock and roll here with any slight move of the market. It dipped a little lower on the recent tiny slide down that we had, and then is bouncing up today with the signal line back up above 80, which is the overbought zone in slow stochastics. What I'm noticing here so far today, and I know it's early in the day, but we are making this new all-time high on very low volume. So although I'm not trying to issue any negativity onto this chart in any way, I'm still, whenever you have a new high on low volume, you want to keep an eye on it. So I really suspect, I firmly suspect that next week is going to reveal whether the SPY can break firmly above this 250 line, the S&P 500 itself firmly above 2,500, and then rally up to maybe over 251, 252, up to 255. If it can do that, that would be, of course, extremely bullish for the market. Or again, and we always have to consider, does profit taking come in here? Does price need to move down, perhaps to the 50-day moving average, and take a rest? So again, if it does move down, it has all of that support at the 50-day moving average down to the trend line at 246, and on down to 243, 242 and change, 243. So lots of potential support here should the SPY find it necessary to move lower. But next week will tell the tale, so we shall see. Our next chart today is one of the iShares Russell 2000 ETF, the IWM. And as I've told you many times, this is an index. It follows the Russell 2000 index of small cap stocks. And we watch this in Toni's Market Club because the IWM, or the Russell 2000, can act as a leading market indicator, and so far so good. We know that the IWM, or the Russell, is trading at over 144 at its last all-time high. Today it's at a new all-time high at $148.26. Now, we're going to have to see if this is a blow off top, because this is a big move up. It made from these lows down here at 134. And if we go from down here to all the way up here, where it's trading again today at about 148 and change, that's a 10% move up. So this has been huge. Just when we thought all was lost and it made a dive, it came right back up, rallied up real strong. 3 days ago on this day, we see very, very strong volume here, quite a squeeze we have going on there. And then again today, we're on very low volume. So again, we have new high on low volume, at least so far, with the IWM trading at quite a big discount to the 20, the 50, and especially to the 200-day moving average. Now, I'm going to keep an eye on these moving averages to make sure they all continue to rise. Of course, the 20-day is a short-term moving average, so as long as the IWM is higher, it will. Want to keep an eye on this 200-day moving average, especially to see if it flattens out, then maybe we need to be a little more conservative. Again, next week, we're going to see if this index has legs or if it's just a show-off. Bet you my duck slippers next week that the IWM comes in for a little bit of a retracement, if nothing else, from profit taking. That's where I want to see, where does this next low come in. I would love it to be a higher low and move back up over and catch up to maybe 150 or so, and that would be an indicator that we're going to swing heartily into the holiday season. Again, the RSI here, though, is overbought, usually in the short term, usually indicating that profit taking will come along pretty soon, as is our slow stochastic. So again, keep an eye on this volume. New highs on low volume sometimes is not ideal. That's just, so let's not back up the truck and max out our margins here. Let's continue to be conservative, because quite honestly, at this point, that is the very wisest thing to do. Okay, finally, our last chart for the day is the select sector, the SPDR Consumer Discretionary ETF. The top components in this ETF are Amazon, Home Depot, Comcast, Disney, and McDonald's. Now, the XLY made relative highs back here in June. This was June, the end of May, June, and July, of about 92.50. So it made actually a double top here, as you can see this. Then rolled down below its 50-day moving average, did not fulfill the usual double top measured move did not fulfill that, came down, and then has recently started rallying up. In August, it came down to about $88, these two lows down here, and then started rallying back up. So consumer discretionary here has started making higher lows here. And today when I caught this chart, captured it, it was trading at $89.93. Now, as you can see, it's trying to mount or penetrate, move above the 50-day moving average and get back atop that important line. So I'm going to keep an eye on the XLY in the coming week. I'm going to see, with the holiday season coming on, many of these stocks are poised to rally. They benefit from the holiday season, so I'm going to keep an eye on the XLY, see if it can move up above 90, back above 90, and if it can rally from there, gain momentum, get legs, and move back up perhaps toward 91 or 92. Of course, I want the XLY, if I'm in it, if I own shares in it, to stay above the 50-day moving average, the green line on my screen. As long as it stays above that line, I'm in. Should it roll over and fall below it, I will exit the trade. Okay, so stay tuned and check out the XLY to see what it's going to do next. And now, on to this week's economic reports. But first, if you are an active trader or an active investor, and you're not seeing the level of profits and success you should be, then this may be the most important message you ever hear. Once and for all, wouldn't you like to have an easy but complete step-by-step process that earns you steady profits? Wouldn't you like to trade with clarity and confidence and sharpen your decision-making skills so you can reap bigger gains? Now you can. Renowned market expert Gordon Scott, CMT, and I created our flagship trader training, 7 Steps to Successful Trading. Once you move through this program, you will be able to trade with ease and certainty. And check out this training now because we're offering it at a huge 37% discount. It's one of our biggest discounts ever. But this amazingly low price will end in just a couple of days. So click on the link below and once and for all, discover how you can become the trader you've always wanted to be, starting now. And on to economic reports. On Monday, the ISM index comes out. That's the Institute of Supply Management. On Tuesday, we have auto and truck sales. On Wednesday, we have ADP employment change, the ISM services, and our usual crude inventories. On Thursday, we have our usual jobless claims and our usual natural gas inventories. And on Friday, the jobs numbers will come out with that all-important unemployment rate. And remember, trading and investing successfully takes a certain level of training. It's not hard to do. You can easily and quickly learn what you need to know to be successful with Gordon Scott and I in 7 Steps to Successful Trading. Just click on the link below and please check it out now because this sale ends in a couple of days. Until next week, keep green on your screen. I'm Toni Turner and this is The Market Now.